There we go. Test, test, test. There we go. Okay. Hope you guys have all been doing okay. This is a pretty busy late Sunday night. Oh, Loki says hello as well. I don't know if he'll still be up here by the time I change this up. No, he's not. He's over here now. Maybe you guys can see him. There he is. Yeah. There's nothing for you over here today. Yeah. The treats are in my room. Yeah. Okie dokie. Let's go back over here to this. So as far as everything's considered today, guys, we're going to be mostly like I'll be answering some of you guys' questions there, the members. And I think we should spend some time looking at the stock market this week because we are starting to hit some levels of resistance, and it's really going to come down to how our earnings this week, and primarily, and also I should say, how is the Fed going to handle all this kind of decent news that we've been getting? Will that mean they feel confident enough to go up to 75 basis points? Or does that mean they're probably just going to stick along with this 50 basis point rate hike that we've been talking about for the past few weeks, right? So if you guys didn't know, meeting, there we go. We have one coming up here, I believe, the 31st to the 1st. So that's going to be, if I'm right, so that's going to be Thursday. It looks like we do have that. No, excuse me, Wednesday, we do have that Federal Reserve rate hike coming. I'd probably say, just to guess here, it's probably going to be around a 50 basis point rate hike. I'm not too concerned about what happens unless it's like above 50 basis points, if that makes sense. I think it'll hit the markets a little bit, but I don't think that's necessarily going to kill the rally that we have right now. I think the only thing that's really going to kill the rally that we have right now are some of these mega cap stocks that we've been talking about that have earnings coming up the day after. I think that's Thursday, right? So if we go over here to FinViz, we'll go check out Amazon very fast. Amazon has earnings February 2nd after market close. That's the day after the federal rate hikes go up, right? The Fed meeting, excuse me. We also have Google over here, also February 2nd after market close. That's a lot of market cap there, and if those two don't do well, you will see the NASDAQ come down pretty hard, okay? And the last one I'm really paying attention to, of course, is going to be Apple, also having February 2nd after market closes. That's also going to be having earnings. So if these earnings are not good for any of these particular plays, you will most likely see the market give back a lot of the gains we've received over the past few weeks. And that's why I'm more paying attention, I would say, to Apple, Google, um, and see how the earnings are being received by the overall market. Okay, keep an eye out for Amazon as well. You could always, if you guys want to, you could always go to this website. Earnings this week. I always forget the name of it because there's two I go to. There's Yahoo, there's Nasdaq. This right here, Kiplinger. This one's usually pretty good, and it'll give you the majority of the earnings for the week. That way, you guys can see what's going on. I usually just go with the noteworthy ones because those are usually kind of done by market cap, if that makes sense. So you can see right here. Let me see if I can go down a little bit more. Wednesday. So Wednesday we also have Facebook. That's going to be interesting. Altria, if you guys, oh, that's Aflac, Allstate. Not really much here as far as stuff I really care about. Not really much. Maybe Netgear, MetLife, perhaps those two. T-Mobile might be interesting. But Thursday, there you got the big boys coming out. You got Apple, ABB, Alibaba. That's going to be a big one if you guys are in China. Hopefully they have a good guidance because China's opening up. If there was one thing I would try to be bullish on this week, it'd be Alibaba. Hopefully that'd be my long shot there. Alphabet, Amazon. We have a lot of different things to look at this week, but primarily, guys, it's Alphabet, Amazon, and Apple. Those are what I'm looking for. We have ConocoPhillips if you guys are kind of following me on some of those oil trades that we talked about. But primarily, with the Exxon and Chevron moves that we saw last week, oil may pull back just a little bit here. We also have MicroStrategy. This will be interesting if you guys like MicroStrategy because of Bitcoin exposure. Maybe with this most recent pump we've had, they may be able to change their guidance up a little bit, but I'm not entirely sure because the majority of their profits come from just actually holding assets, right? All right, so as far as Apple's concerned, everybody, this one's been a little bit more tricky for me because you guys can see we've had a few weird breakouts over the past few months. So you guys can see this one right here. This one was interesting, right? That was the last breakout we actually really talked about where it was kind of exciting to kind of see where we were going because we also managed to break out above the 20-day moving average. We were able to pump up a little bit higher here, and we did eventually get rejected by the 200 daily moving average. At this point in time, we've had another breakout after, of course, having a smaller breakdown, testing out some support levels here, over here, bouncing off of them, breaking back above this resistance level here, and breaking out there. And you can see how crazy of a rejection this was right over there. but we're currently testing out this 200 daily moving average. As far as Apple's concerned, I would probably like to continue to day trade this going until Monday, Tuesday, Wednesday, Thursday. I'm probably not going to touch it at all. You if I was to guess, I'd probably say they're still going to have good earnings, but I just don't know what their guidance is going to be. I bet they're going to have made a lot of money. It's more about what do they see the economy doing in the future. That's why I get more nervous about all this type of stuff, right? So if you guys were looking for some day trades on this, usually I've been going off of this week, I would say mostly the 15 looking forward and the hour chart. You guys normally know I like to look at the 4 hour chart here, but the 4 hour, it's giving you a little bit, right? But I would just primarily be looking at the 1 and the 15. The 4 hour, I'm really just watching the moving averages here because you can see most of the same information here from the 1 hour chart. So just like how we were looking at the 20 and the 50 here for Bitcoin, I'm primarily looking at the 50. The 20 here is kind of important to me, but the last time we broke down, it was only temporarily, and it really didn't mean too much. We've kind of we play around with this a little too much for comfort as far as Apple's concerned, so I usually don't care about it too much as a level of resistance and support. You can see right here, 50, kind of a clear level of resistance. Of course, we kind of popped above it, then we came back down. The 20, just not as nice, if you ask me, right? So for now, I'd say, hey, keep an eye on the 20 here. Just kind of give maybe a little bit of a warning that something bad may be about to happen. But I don't think anything really catastrophic is going to happen until we see what goes down on Thursday here. Okay, let me change one thing up here very fast. There we go. I think that's fine right there. Okay. All right. But so far, guys, if you guys have been trading this on the 15-minute chart, I don't know if you guys have multiple windows you guys can look at here. But these breakouts have been pretty simple. Don't fall for the 15-minute breakouts. That's something I had to learn this week. It's primarily the 1 and the 4 hour. The 4 hour is usually the golden sign here if you guys like to take it. It usually confirms a breakout. Then you just have to wait for that support level to hit back up, and you're usually okay with it, okay? Now, if you guys want to trade this, at this point, that breakout's already occurred. You could probably try to get part of that breakout tomorrow. I would assume the market's going to go up a little bit higher here, and then maybe go more sideways as we kind of head into CPI numbers, or Federal Reserve rate hike numbers, okay? Now, a few other things here. If there's one thing I'm looking at from more of a pessimistic side, it's just going to be this. If we decide to break down below this before Thursday, I'll take a short put option on it, and I'll just see where it goes from there. But I'm not going to really be going heavy on this, primarily, again, because we just have earnings right there, and I'm just not going to put... I know it's going to be more risky for me to do some trading at this point in time, okay? Now, as far as some of these other plays, probably best to go over here to Microsoft, because Microsoft already had earnings. You can see had a crazy pop after hours, had a nasty drop because of how they presented their earnings report. I should say the earnings report itself, as you know, the market closed, it was decent news. But as you kind of went on through the call, you kind of says, this doesn't sound too right. The only reason it managed to pump back up to these kind of higher levels than before was because the overall market was still breaking out, as we talked about the NASDAQ and the SPY and those types of indexes, right? Now, Microsoft, we talked about this last week. It's still in this same uptrend. There's nothing really changed about it so far. Still going up, barely, but depending on how you guys want to look at this, that could be considered a breakout. I'm not really going off of that because of that crazy wick we saw, even though it was after hours. But if you guys are looking for some support or maybe looking for an opportunity to do a little bit of a put, you could try to follow this breakdown right here. And hey, Bideford, I know, very late Sunday night. I've been working on a bunch of stuff today, and I'll show you guys this in a few minutes. And if you guys have any comments about what I show you guys in a few seconds, let me know. So basically, I'm just watching for another breakdown right here. But the interesting thing about Microsoft is because it had all these wild moves, I can get rid of that type of stuff because you can see that breakout right here. Again, just like Apple, we're kind of heading for this 200 daily moving average here. The 50 and the 200, really not too significant here. You can see, like we talked about before, they're just not stuff that's been strong or reliable levels of support and resistance that I like to use for my trades, okay? The 200 so far, it's been nice, right? 200 rejection, 200 rejection, 200 maybe a rejection later on this week. I would probably buy some puts if we were actually to come into contact with that. If you guys don't know how to do that, I'd primarily just tell you guys to get rid of the 20 and the 50 right here for now. You'd want to set this to the daily and then just go over to your 15-minute chart or your hourly chart. Excuse me. And then you guys can see right here, getting closer and closer. And as we get closer to it, the best thing you can do is probably to open up some puts on it. At least at this point, everybody, let me bring those other moving averages back on here. And let me also put this back onto the daily or the chart. If we do manage to get up here around the 250 to 253 level, the puts I'd be looking to buy right now are probably the 245 level, going into not this Friday, but next Friday. If you did want to play something starting tomorrow or the day after that kind of expires this Friday, if it's at 252 or 253, I might as well just go for 248 or 250. I kind of want to be closer to the money for these types of options plays just because I'm not really optimistic about this week as far as the market's concerned. I understand we've had a really good rally, and I've enjoyed that. I scaled out too early on that rally, but most of my income right now has mostly been coming just from day trading, which has been absolutely fantastic because of all these nice volatile days that we've been having. But unless I know, like, for this week that Apple's having great earnings, Google's having great earnings, and Amazon's having great earnings, I'm just going to stay this pessimistic kind of guy saying, hey, we're in a good mood, we're in a good spot right now, but we really have to rely on those three to have great earnings to continue this rally up and see some really crazy levels. These crazy levels continue, okay? Now, and hey, Ghost Rider, happy to see you back as well. As far as the weekly chart's concerned, we did manage to get back above the 20. You can see this actually has been more of a reliable level of resistance, except for here, unfortunately. But, normally we pop above it, we get some momentum. Watch what happens to the 50. Last time we came into contact with it, we did unfortunately get rejected back down, but we probably won't come into contact with this until maybe later on this week if we do have a good week, or possibly next week there. But I do think eventually this is going to be one of those resistance levels that actually pushes Microsoft back down, and that's if we start to see more negative economic news, right? Like we had solid GDP growth, but it was still going in the wrong direction. So we're still seeing that slowdown. If that slowdown continues, eventually it's just going to end up being a recession. But for now, better than expectations, just still going in the wrong direction, if that makes sense. We have to hope that things can pick up here a little bit more. A few other ones that I wanted you guys to pay attention to before I show you something here. Netflix is going to be pretty interesting. I want to see how this works out tomorrow because Netflix, to me, it does its own thing sometimes. So you guys can see on the right-hand side of my screen, there's a lot of green stuff. A few things that are down, but that's mostly oil and maybe Macy's. You can see most of tech over here, or just online companies in general, have online presences. They're all for the most part green. Well, Netflix doesn't really follow along with everybody else because it's been having its nice own little pump here. What I would say is keep track of this one right here. I might be considering buying a put again if I'm more pessimistic about this weekend. Again, you can see that 200 daily moving average. If we kind of hover around this level for a little bit longer, maybe even break out and just go up to that 200, depending on what level that's at. Let's say for tomorrow's sake, let's say we don't break out or then we just kind of go sideways here. I might put an entry put position right here at a 355 strike price right down here. It's like really, I guess I got to zoom in here a little bit more. As you can see, it's not too far away. There you go. I got 355 strike price. You guys can go as low as 340 here, I would say, just because this thing has been known to go down a lot in a short amount of time. But if you guys are looking for more day trades and stuff like that, you guys could always go down here for day trading options. But I would say for me, if I did want to do something more of a swing trade here, because again, we are at a level of resistance. You can see how we've kind of broken out above it a few times in the past, only to get knocked back down. I kind of like buying a put opportunity here and just playing it back down here to the 330 level. That'd be a $30 loss as far as this asset's concerned. Just bringing it right back there. I know it could possibly go back down here, and of course, I'm going to try to play that out, but I'll probably play it out in two different steps, or I'll probably have a scale out level here and another one here. Primarily, the reason I'm going for more plays like this instead of the normal ones where I might tell you, say, hey, let's go all the way down to this resistance level like that. The reason for now is that the market's been pretty volatile, and at the same time, I'm not really buying calls or puts that kind of go out too far ahead of time. So I don't want my theta to decay, especially if we kind of go sideways and then drop. I don't want the cost of my premium, the value of my premium to be going down during that time, okay? So I'm looking to make some short 1 to 2 day trades this week. That's primarily what I'm looking at because I also have to do a lot of work this week. Some of the things I wanted to tell you guys about here before we start going over to Tesla, Amazon, and some of the other stuff out there. Okay, this will be fine for now. So this is what the new daily schedule I've been working out. It's going to be a little bit different tomorrow because I have an appointment at 1:30, but it's an at-home appointment, so I can do a telecall. But basically, every Monday through Friday, every day, I'm going to start doing an 11 a.m. news update. This will not be going over technical analysis. It'll be going over news of the day. This will probably be a 3 to 5 minute long video. and it'll basically just cover some of the big news of the day, probably something about crypto, something about the stock market, and maybe something related to politics where it relates to the stock market or the crypto market. It's like a regulatory type of thing, right? As far as we actually have news about those types of events, right? Every day at 3 p.m. members, you guys are going to start getting daily updates, primarily about Apple, Microsoft, Nvidia, possibly Tesla. Yeah, and Google here too. I might change up Tesla and put something else there in between, just because the options on Tesla are always kind of expensive, and you guys that trade Tesla know what I'm talking about there. So, and then also between 6 o'clock and 7 o'clock, I know this isn't the largest font for you guys to read here. I'm going to start my live stream somewhere between 6 and 7 p.m. basically just when I have time. Sometimes I have to pick my mom up from dialysis. Sometimes I have to run an errand. And so sometimes in the middle of the day, I'm kind of out and about, okay? So from 6 o'clock to 7 o'clock, because that's when I'm usually going to start, I would say just kind of aim for 6:30. But I'd probably say kind of aim for that time right there. And then I'll be posting more shorts throughout the day. They're going to be random shorts about stuff I like, crypto shorts, stock shorts. I'll probably just do a lot of not even my own shorts. Mostly just I see somebody else for short, I'll use the cut button on YouTube and I'll kind of talk about what they were talking about here if I find it interesting, giving more elaborations. And another thing, I'll be doing a few more posts here, mostly for asking you guys questions or just giving you guys short updates. Maybe if I see something I like, I'll be like, hey guys, take a quick peek at this and see what you like. Or if we talked about something on the stream, like we talked about Apple with the 200 daily moving average, or Microsoft, I'm like, hey, remember how I said this could be a good level of resistance to open up a put? I might just say, hey, remind you of that. So next time, if you're ever thinking about looking at the 200, you can kind of remember, oh yeah, let me go back test this and see how it worked out in the past, things of that nature, okay? And then Saturdays, I'm going to do members only streams, kind of what we're doing now, but only members can watch it, okay? And the other thing I wanted to show you guys here, I can get rid of that, is so you guys know I'm working on this long tutorial and course for you guys. I've started to do some recordings, but I wanted to like switch up the way the course was made or structured, I would say, just because I am, how do I would say this? As I make the course, I'm like, okay, this doesn't sound right, or this doesn't match up with this. I need to put this in the right order, right? It's like trying to teach for this course. So what I've done is I've built out a new format for everything, and I did this today and yesterday. Let me go over here very fast. And hey, Aaron, happy to see you back, my man. Let's see. And Aaron, you can give me some advice for this one. Then the same with Bideford and Ghost. So this is the format for the new course I'm working on. So what I decided to do for all of you members out there, or just in general people that watch the stream, because it's still kind of a slow time in the channel, the market's, while it's going up, most people don't have all the crazy expendable income to kind of bring all the traffic back to the crypto channel, stock trading channels, if you guys get what I'm saying. And not everybody's trapped at home under threat of going to jail like it was that first March. That was freaky. But what I've decided to do is I'm going to be selling the course through some website. I don't know what it's called. Trend lines, no. Trading, bookmarks. What is it? Investopedia is probably there. Teachable. There we go. And basically what this allows me to do is it allows me to like give coupons and like give the course out for free. So for like example, everybody that's like watching this course right now or watching me talk right now, I'm going to give you guys a free coupon so you guys don't actually have to pay for the course. And then what I'll also be doing is doing smaller courses that aren't as long as this. And I'll be putting those on YouTube. So I'm thinking I can use that as some type of external revenue where I want to do like use that revenue as some type of how would I say it, like a live trading kind of investment, because I want to do a bond series for you guys, but I want to have like just $10,000 to toss at it without having to really worry about where it's going, so to speak. So I want to use the money for that, and probably just the move for Nicaragua as well. But basically, this is how everything's going to be structured. There's going to be an introduction, an overview of the course, prerequisites for the course. Basically, you just kind of have a basic understanding of trading, and then if not, I'll teach you everything in there anyway. The learning objectives are going to be stock trading basics, introduction to the stock market, understanding financial statements, basic stock market terminologies. Just get some names and terms under your belt. Same thing for crypto that we just said with stocks. Same thing with options, basically. And then we're going to go to trading platforms and tools, the types of trading platforms, types of trading tools, whether it's be algorithms, TradingView is a tool, FinViz is a tool, all these types of tools that you guys may use. Even Investopedia is a tool, right? So after that, we'll be going through a computer equipment. That way you guys can figure out if you guys need to actually invest in a computer or if your computer can hold up to maybe a TradingView website, because some computers can't even run TradingView because the RAM isn't high enough for the memory. I don't know exactly what it is, but some computers can't do it. On top of that, we'll also be going over monitors, things of that nature. If you guys are just using a phone, I'll have kind of a segment on just how to use your phone to learn how to trade, right? It'll be more difficult, of course, but it's the way it's going to have to be if you're only using a phone to trade, right? How to maintain your equipment, just simple dusting stuff. Then we'll get on to technical analysis, trend lines, patterns, indicators, how to use technical analysis in trading strategy. You'll notice that most of these kind of just go A, B, C. A lot of them have A, B, C, D, E, F, G, H, I, J, K, L, M, N, P, Q, like double Z's, double A's, like you guys are in the stadiums or something like that. So there's going to be a lot of stuff here on technical analysis. I think this kind of takes up like at least 4, maybe 4+ hours of stuff just in this one type of section here. After that, we're going to be going over to risk management, position sizing, stop loss, and hedging. I don't usually talk about hedging because it's kind of complicated and it really depends on each of your individual portfolios, so it's kind of hard for me to just give any advice on that. Afterwards, you got stock trading strategies. This is where we start taking all the stuff we learned here and we start to apply and like, how would I actually do this trade? Figuratively, like how would I do this? Why would I be doing this? And same for crypto and same for options, okay? Most of you guys might even skip crypto and options and just focus on one, or skip stocks and options and only trade crypto because maybe you guys want to have leverage and you guys want to do day trades, right? There are different rules depending on how much money you have for each of these different types of trading assets, right? And then tips for developing an option trading strategy, all that type of stuff. We'll be going over iron condors, everything you can imagine with options. Then market psychology, making your first paper trade. You'll notice that you're not really trading until chapter 13, which is like 8, maybe 10 hours in, maybe even like 12 hours in. You guys aren't even doing it for your first paper trade, even though I know a lot of you guys have already started to trade and stuff like that. But this is how I'm going to bring the course up just in case, just because I want new people to not just start throwing money at the market, right? Especially in this turbulent time. Oh my gosh. Okay. And then, how to simulate a trade, preparing your strategy, remembering what you've learned, that type of stuff. Updating your trading journal, reviewing your trading journal. So basically, like how to set everything up, then how to actually use it properly. Making your first swing trade with real money. That's part 16. Funding your account. This one's going to get moved up a little bit higher. I just think I got to move it up here, honestly, to maybe number 6, number 7, probably before technical analysis. This one's probably going to get moved up. It's basically just like, hey, I have a 9-to-5 job. I don't know if I have enough money to actually become a big old investor. Hey, save $5 a week, save 10 weekday, save $10 a week. So as you're working through this course and you're practicing and doing lots of paper trading, you're still building up that account without having to actually worry about like losing money while trading. I told you guys plenty of times that every single trader that I know that's gone full time has lost thousands of dollars throughout the process. I'm trying to mitigate that by just forcing you guys, or forcing the people that are newer to trading, to actually just go with paper trading until they're really ready for it. And the data from that trading journal that I show them also will substantiate that, hey, you're ready to go, which will be interesting. Then we're going to go over capital gains taxes, how to calculate the tax, how to report the capital gains tax, and how to minimize taxes. Sometimes taxes can be tricky, especially if you're not sure. Like, hey, I have a tax form from Google, Robinhood, Webull, Binance. They're going to be coming out with some pretty soon too. Voyager, if before it went bankrupt, KuCoin, BitGet, BingX. You're going to have a lot of stuff, and you want to make sure everything is organized, because most of the time they're not going to send it in the mail. They're going to send it to an email, which means we're going to have to set you up with like an actual account primarily just for trading stuff, which isn't a hard thing to do, but you want to be organized in that respect, right? Especially as you're formulating your plans, getting your trading journals and stuff. Because what I've seen over the past few years is Google start to really dramatically cut the amount of data you guys are able to get when it comes to when it comes to us using their systems. So they always try to get you to pay like for a monthly fee to get more data. I want you guys to have a fresh account that's not going to get filled up, and it's not going to go too crazy there. And then eventually, getting a backup account. Portfolio management. This is for longer term accounts here. Most of this stuff will be covered in some of the earlier topics. But portfolio management, probably a longer term investing course down here. This is going to be kind of a bonus section because I don't really think many of you guys care about long-term investing. Because mostly long-term investing is what I do with the profits that I make, and I only take a portion of it to actually use for my day-to-day living. Right, my expenses every month really only take up maybe around $2,500. Sure, I can splurge and maybe go up to $4,000 or $5,000, but that's usually like I'm going to Vegas in March. That'll be a splurge month because I'm paying for first class to get down there, a nice hotel. The dinners are going to be at least $100 every night. That's a splurge. But most of the time, you guys aren't going to really be splurging in your day to day life. Or at least I hope not. Maybe some of you guys live more exciting lives than I do. And backup account, this is just something like a savings account, but for your investment account. So let's say you do something really stupid. You saw your 49ers lose tonight and you get really, really drunk and you rage day trade and you lose like $10,000. Well, you lost all the money in your account. Now you can go back up to your backup account and you're like, oh, I still have money without having to put money straight from your investment account, right? Or your bank account, right? Because eventually that will be your only source of income is investing. So you really don't want to mess with that. The 21 will be quitting your job. This is basically, this will be a long process here because how to plan for quitting your job, how to manage the transition, and how to maintain income while building your trading business. This will be really fun for me to explain to you guys, but I think the majority of you guys, honestly, you guys know I have really bad ADHD, so I prefer to just quit my job and just like go straight into this, and I kind of like all the surprises that came along, like no health insurance, nothing, no cell phone stipends from work and stuff like that. It all kind of hit me at once, and I was like, oh, I'm paying my own bills now. Ugh. Right, the company's not paying for the bills anymore. Um, I think a lot of you guys, and what I've seen from a lot of you guys that have been making decent money over the past couple of years with me, a lot of you guys have been just saying, hey, I don't really want to quit my job. I just like having an extra $2,000 to $3,000 a month. And we'll be talking about maybe you guys just want to have a job and you guys maybe even just do like a part-time job, but you still want a regular job and you guys still want to be trading because you want some type of security just in case something bad ever happened with your trading position, right? Trading job. And that's totally reasonable. I'm more of that guy typically, but because I have like really bad ADHD, I typically just don't like to work because what would take you maybe 9 to 5, that might take me a 9 to 8 type of job, right? It takes me a long time to get work done. Although my work is of high quality and I usually get paid very well because of it, it does take me longer than the average person to complete said work. Right? So, but I don't think many of you guys are like that. And then, of course, long-term investing, how to identify long-term investment opportunities, how to develop a long-term investment strategy, and how to monitor your long-term investments and make adjustments, over time, right? And then, conclusion review of the key concepts, kind of a review. I'm not entirely sure how I want to do the conclusion because at this point, you guys already know anything. I don't feel like I need to go back and review. But I think for me, the conclusion is going to be more about at the end of this, and if they completed the entire tutorial, where to go back and rewatch stuff and maybe answering some questions over time. So I feel like the conclusions actually be very fluid. So where it's going to get to the point where, as you guys ask me questions on the YouTube channel or on this website here, I'll be able to kind of say, hey, this is what some of you guys have talked to me about. Here's a couple answers to these questions, yada, 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 if that makes sense. So it's a pretty long course I'm building out. And of course, it's not just ABC. It's like, well, maybe here an introduction. But, it's like A, B, C, D, E, F, G, A, B, C, D, E, F, G, H, I, J, K, L, M, N, P, that type of stuff there. Okay, so it is going to be a process. I'm not going to lie, but this should be a fairly long one. And I'm still not entirely sure how I want to record it. I have somewhere. Nope. It's on my sofa behind me. On my sofa behind me, I actually have a teleprompter that I had my camera in this morning, and it was a pain. It was a real pain to use it. So, because I have to use my phone and put it right there for the mirror to kind of pop it up for me. Um, I think I'm just gonna read the script, kind of just and you guys will see me reading the script. But I think that'll just be fine because I don't think you guys care if I read the script. It's more of just like you guys want to know that you guys are getting the right information as far as becoming an investor and whatnot. Um, so I don't think that'll be a hassle down the road. It's just too hard for me to literally memorize a long script when it comes to some of this stuff. Like one of the scripts I've been working on right here. Well, this isn't even the final script here. Welcome to the because I got to change it up because I have to put some more personal stuff in the script here as well. Um, but this is like one of the formats here for it. Welcome to the course. If you're here, it's likely that you're interested in learning how to trade stocks, options, and crypto. Trading can be challenging, yada yada. And this isn't even like half of the introduction, because then we got to start talking about some stuff. We have to go over the course overview like this, and then all of this stuff is going to be in a format that goes more into it's a mix, right? Part of it's going to be PowerPoint presentation just to give you guys everything really easy so you guys can see it. The other part will be actually in-depth videos that go over the stuff we talk about in the PowerPoint, if that makes sense. Kind of like how a college professor would kind of write on the board and show you what's going on, and then or you guys look at the book and see what's going on, and then afterwards he kind of gives you an example of how to actually complete the project or how to complete the problem. That's what I'll be going for here, which will be kind of fun. But a lot of it's going to come down to time and effort, because what I have to add on to that list, and I already deleted it off my page or got out of it, is like over time. Well, I guess it's already going to be in there, but just like the B, C, D, E, F part. Is once you guys start doing your trading journals and you guys start doing your data, how can you guys continue to manage it in a way where you guys aren't getting mad, or you guys accept what the data is telling you, right? And then even within part of those, at the same time, it's choosing your 15, choosing 5 crypto and 10 stocks to trade, or if you guys only want to trade crypto, trading, only choosing 10 crypto assets to trade. If you guys only want to trade stocks, it's only 10 to 15 stocks as well. Most of the time, it's only going to be around 10 stocks. 10 stocks, excuse me. So there'll be a bunch of stuff there, but I'm hoping it turns out pretty well. I've been putting a lot more effort into that as of late, and so far it's I got everything structurally down. And hey, Ken. Oh, I was just going over the course that I'm be building out for you guys. Long story short, what I decided to do is I'm building out this course. I'm going to sell it here for all the members and people that have just been watching the channel for a while. I'm just going to give them coupons to get it for free. And I hope you guys will rate it a 5 out of 5-star course. But after that, basically, I'm also going to be making smaller tutorials after that larger tutorial is done, and I'll be posting them on YouTube. So within that, you probably saw something like a stock market strategy, or what is a stock, what is a cryptocurrency, that going over those things. I can just have a quick 20-minute video explaining everything to you guys need to know about stocks, what a crypto, what's crypto, what's options, simple like that. And then I'll have another tutorial actually talking about how to trade them and stuff like that. Everything comprehensive is the one on Teachable, right? So right now I'm having little accounts here, and basically over time I'll be able to do all this type of stuff with it, which would be pretty fun. I'm pretty excited to see how it all works out. Will the learning course be all inclusive or broken down into each section? For example, if someone wanted a crypto and a TA, but not the options course, they can get a better handle on trading. Yeah. So basically, I'm trying to think of a course, like if you guys have ever seen Hunter's educational courses, maybe I can just like see a course right here, or maybe Teachable. Maybe I can just go to, I don't know if they have an example course for me to show you. So yeah, so basically, it'll be like chapters in a book. And so you can say, hey, here's this chapter about stocks, everything I need to know about stocks, everything I need to know about options, everything I need to know about crypto. So you may see introduction at the top, chapter 1. Within chapter 1, it goes over, part A, so to speak, stocks, options, crypto. If you don't actually care about options, you can just go and look at the data for crypto and stocks. Now, it'll be there if you want to have access to it, but you can always skip over it. It's not going to be like you have to watch all. It's not like the driver's license videos you had to take a course on in high school. You're not going to have to watch everything. You could only watch what you want to. And I think the majority of you guys have been kind of watching for a while. Maybe some of you guys just go straight to the technical analysis part, which is like a 15-hour course. But everything's going to be broken down into small quadrants there, because like there's going to be like a 20 to 30-minute video on each pattern. So that means everything I know about like a flag or a rising wedge or whatever you guys want to talk about here, like there's even patterns with all this stuff, right? That pattern right there, it kept on coming back down. The pattern right here, right? All types of stuff. And even then, just the simple stuff, right? A little bit of scale out points, a little bit of scale out points, a little bit of scale out points there, hitting a scale out point right there, or pivot point, whatever you guys want to talk about. Pivot right, pivot there, kind of bumping up as well, depending on which lines you actually put onto the actual chart here. But basically, all that stuff will be in there. You guys could always skip over whatever you guys don't want to learn about, because some of you guys don't need to know what a stock is, or maybe you guys don't need to know what blockchain technology is. Yeah, so it's not going to be like, oh my gosh, you got to go through everything. You guys, but it'll be in there. It'll be in there. That's the thing. It will be in there. It's just that you guys don't have to watch it if you guys don't want to. And it's not like if you guys are like the technical analysis portion, it'll encompass technical analysis generally amongst all the different asset classes. However, when it comes to stock trading strategies, which is a whole nother chapter, you would want to watch that if you wanted to go stocks, but you wouldn't have to watch crypto trading strategies. The only real difference I would say between the two is crypto can be a little bit more volatile, and you have to be more aware of what Bitcoin itself is doing, because Bitcoin really controls where the entire market is. Whereas, the stock market has earnings reports, dividends, just so much more stuff going on, right? As far as day trading, swing trading, long-term investing, it's just much different. Even the platform's different. So, those differences, but you guys don't have to watch everything of everybody if you guys don't want to. But I will put it in there, and I will design it in such a way that if you guys only wanted to watch one, you would be able to get all the information. So at some point, it might be a little bit redundant to watch the second and third, but I would still encourage it because it really cements it into your mind if you guys wanted to learn all three. I don't think many of you guys will actually care about learning every single, asset class. Because a lot of what you guys can use this for is also Forex trading. I don't do Forex trading anymore. I like it every now and again, but really, euro versus the US dollar, let's go to the monthly chart. Euro is way down from that 95-cent low we saw a while ago. Definitely pumping back up now, reaching some of those resistance levels. But, most of the time, double top, broke down, came back up a little bit. I wouldn't even see this breakdown. You could just go right here. You guys see that that's a trend line that got broken down right here. You guys saw that. And you guys don't even trade Forex. So it's not impossible. And sometimes you can see stuff like this, right? Some support. Maybe if I drag this on a little bit longer, you can see how we had a couple. Let me go to maybe a daily chart, perhaps. You can see that when we came into contact with it, we managed to hold the first time. Not the second time, unfortunately, but at least the first time. And you guys will see that basic technical analysis works a lot when it comes to currencies. The difference is how you trade the currencies. You got to go with the pip system. You're not trading off of like percentage technically. You're going at pips, because you're trading again with like, a currency that's going up small amounts. It's not going from $1 to $2. It's going from 1.0016 to 1.02416, right? And this is a pretty volatile time for the market too. But there's differences in them, but you guys get the overall gist, if that makes sense. Even going back over here, depending on what you guys are looking at, even there, that was a false break. Oh, it wasn't a false break, it just never close. And you can see how we actually, if you extend it over, kept on going, finally broke out, held a support for a little bit, eventually came back down. You guys see all that, right? But at the same time, it's not the same type of thing. It's not the same thing that really drives them. You're not looking at earnings when it comes to this. You can still see the asset over time is falling, right? But at least relative to 2001, so to speak, all the way back over here, 84, it's picking back up steam, and maybe it's done falling for now, although that remains to be seen, right? Because inflation still isn't perfectly set out. And, even here with the pound is definitely a little bit not as nice as the euro. The euro has usually been weaker than the pound, and now the pound is actually compared to the dollar, definitely gone down in value. So it requires you to know a little bit about economics, just the way the nations are working and stuff like that. This is why for the pound, Brexit was such a big thing, because they knew their currency was going to face some difficulties here, and you can see it's just relative to everybody else. It's definitely come down. It's never been this low before against the dollar, never. And so, different little things. Maybe one day I'll even do one for commodities and things of that nature. Although commodities are a little bit more difficult, a little bit more challenging, and they're kind of fun, but I myself would actually have to learn more before I would feel comfortable trying to educate other people on the subject. That's really what it comes down to. Because the only thing I really ever traded is oil and things of that nature. And to go over here before we go back over the stock market, you do see that Bitcoin did have another pump today. And what did we talk about over the last few days? As long as it doesn't break down below that 50 moving average on that 4-hour chart, you're going to be looking A-okay. Let's see. And hey, Trading Journal needs to be moved up, been a while. Definitely. Oh, hey, D's, not happy to see you. Yeah, I could possibly move Trading Journal up. Trading Journal is mostly just like after all the basics are learned, That way you guys know how to go, because you're going to learn about trading journal before you make your first paper trade. But I want the individual to know everything they need to know about, like just kind of getting started with investing, and the basics of what stocks are, crypto, and options assets are. See. And hey, D's, have a good rest of your day, my man. I quit my 9 to 5 job about a year ago. Still wanted a constant stream of income, at least cover my monthly bills. DoorDash, Grubhub, Uber is a good source of income for me while trading. Yeah, I did Uber and Lyft back in college, back in Bozeman, and the money was absolutely fantastic. Um, Especially compared to what I was making before. I was earning like 25 to 30 bucks an hour, sometimes even up to $100 an hour, because I had really good music and I was just a really chill guy in a college town, right? Um, but I use a lot of money for drinking and having fun with friends, but making 25 bucks an hour compared to making $8 an hour, it makes a huge difference. Although in Seattle, I guess it's like here where I live, it's like 15 bucks an hour minimum wage now. And hey, Kane, what puts am I looking at? Primarily over here, it happens to be stuff like Microsoft. So let's go over here to breakouts, or YouTube breakouts here. Um, Stuff that's making its way back up to some of these 200 daily moving averages here. You can see, at least at this point in time, we've already kind of broken out here as far as Microsoft's concerned. What you guys have to be paying attention to, though, is that I don't have a calendar I can just pull up. So on February 1st, we have the federal rate hike, all right? So that's going to most likely be 50 basis points. That's probably not going to get the market too happy, but maybe we have a little bit of a pump, maybe. The market can be kind of irrational. Like maybe during the day, it's actually a pump, and after the day after, we kind of have a crash. That's what typically happens. Um, but it's probably going to be around 50 basis points, and it's not going to be too bad. The problem is the day after that, which happens to be Thursday. So Thursday is the day you guys really have to be watching for. Wednesday is rate hike. Thursday is this. Thursday we have earnings for Apple, Google, and Amazon. You guys can't see my fingers, but I just did 1, 2, 3. That's where all eyes are going to be. So it's going to be hard to try to buy puts unless you believe that Apple, Google, and Amazon are going to have bad earnings. I personally believe Amazon's going to give weak guidance. Apple, I'm more iffy about. And Google, I would say poor guidance as well because of advertising costs going down. People not advertising as much on stuff like Amazon, not Amazon, YouTube, Google, Google search and stuff like that. So I can see 2 out of 3 having poor guidance. Apple, on the other hand, I truly do not know. Now, we see that sales are decreasing. We see that GDP is continuing to go down in the wrong direction. But if Apple has some good news out of there, it can throw everything out of whack. So I would say this week is probably going to be the last decent week we have before we start to eventually come back down. Unless, again, we have all 3 of those companies having some really good earnings and more importantly, some really good guidance. So if you're looking for puts out there, Microsoft here, if it does decide to bounce back up a little bit higher over here to maybe 253 or so, 250s to 250s, yeah, 250s to 253, I would consider buying some puts around the 250 to 245 strike price, probably expiring next Friday, and doing some day trades or short 2 to 3 day trades with them, okay? The problem is, at least for now, is we have earnings on Thursday for all these big mega cap corporations, right? So if Apple has bad earnings Thursday or Apple has good earnings Thursday, like Google has good earnings, whatever, you'll see the entire market, including Microsoft, pump up, even though Microsoft had disappointing earnings or disappointing guidance just a few days ago. So you just have to be aware of that. If you guys take puts out here and you're not doing day trades and you hold them over Thursday night, it's almost a flip of a coin at this point, unless you guys have dug deep into their data and have a good understanding of it, of what's actually going to happen. And for me, like I told you, from the data I've seen, I can see Microsoft saying, or Google saying, hey, guidance is going to be lower. Apple saying, oh, probably okay, probably even good guidance. You never know with Apple because they haven't even done layoffs yet, but they never actually mass hired like everybody else. And you can see Amazon saying, hey, we think guidance is going to be going down as well, or the economy is going to be going down as well. And primarily the reason for that isn't so much of all the stuff I've read about them as far as the reports and the quarterly reports. It's mostly that now when I go to TikTok, I follow certain hashtags like Amazon warehouse worker. And you're seeing a lot more Amazon warehouse workers be sent home early or even be paid to go home early, like a portion of their check, because there's just not enough work for them at this point. Um, and that's what concerns me, because you guys remember back in the pandemic, they just couldn't get enough workers. They needed workers left and right, left and right. You remember even seeing the South Park episodes on them, and them going on strike because they were overworked, right? And Jeff Bezos with his alien butt head. So I can see those two faltering, but Apple is going to be the wild card for me. And Apple, to be frank, I think Apple is the most important. So I think it's weighted heavier than both of those other two. So I would say be cautious as you go in there. I would probably, if I wanted to play through some of these earnings reports, I would take an initial put position on some of these plays like an Apple or a Google or something like that, probably Wednesday, and just let it see where it goes. But I wouldn't play them for Friday. I would play them for next Friday. And because the earnings come on Thursday night, you're probably only going to be able to see them have any crazy action on Friday. I want to see it kind of play out Monday, Tuesday, Wednesday, as we actually hit a lot of these resistance levels, whether it's the 200 on Microsoft. On the weekly chart, you can see it's the 50 up here. If we actually even do make it up there, this is where the puts get into question. Like if we have good earnings, we're probably going to pump up there. That'll be questionable. You look at it, bottom, maybe a neckline move up here. That's where things get a little bit more tricky. But even over here, again, like Apple's already broken out. Let me go to the daily chart very fast. You can see the various breakouts it's had, but it's broken out. It's gone sideways here on the 4-hour chart, and it's continuing to move up higher. Again, just breaking out the other day and having a nice little move. Nothing crazy, but I guess let me go over here very fast. There you go. See the breakout, came back down to retest, then popped up again. It's breaking out and it's continuing to have some solid moves. Primarily for me, if I'm trying to do a multi-day swing, I'm looking at some of these multi-day trend lines. If I'm looking over here like the Apple, like, oh, maybe I can short this or something, it would be a much shorter trend line, so it'd be much shorter time frame of me actually making the trade. So if we break down from here, sure, I could actually open up a put position right here at 145 strike and maybe just, maybe 144 strike, maybe something like there. And just play it down here to this support, which happens to kind of match up with that support or that old resistance, and try to play it there, because you never know if it's just going to break down, go sideways, and continue moving back up. We just don't know, especially because, again, earnings are right there. So I'm playing these small little things at this moment in time, but these breakouts and breakdowns have been fairly nice, right? Breakout here, again, I'd say primarily look at that 1 hour chart and the daily and the 4-hour chart. Those are the two ones. But if you day trading like I am, it's mostly going to be the 15 and the hour chart. But if you're going to be day trading, 4 hours is usually the best. You can see over here, tried to break out, failed, came back down, made it. You can buy here, you can buy here, you can buy here. It doesn't matter. The breakout should normally continue on, especially because the NASDAQ itself is breaking out. That drives you up higher, and that's where you like to see some really good stuff here. And on the 4-hour chart as well, we're still seeing those golden crosses, which means we can go up a little bit higher. But now we start looking at, now we're looking at this really clustery, ugly level up here where there's a lot of resistance for Apple. That's the next test. I could see Apple maybe getting back up to maybe 148, 150 before it eventually gets pushed back down. But what did we just say? It only gets pushed back down if the earnings aren't that good, right? Otherwise, Apple's breaking out and going to 157, and that's just going to drive the NASDAQ absolutely bonkers, because, again, we really shouldn't be this high relative to what's going on in the economy, but guidances so far have been kind of rosy and kind of ignoring the sales data going down and stuff like that. So we're kind of taking the word of the company, which is fine. They pay for it down the road if they're wrong, because their assets crash. But I think at this point, because the market is still kind of like people saying we're going to have a recession, but we just don't know when. I think it's probably Q2, Q3. Some people say it could even be next year, which would just be horrible, because that means we do a whole bunch of nothing this year, right? Besides some volatile trades. But that's what I'm primarily looking at, some of these larger resistance zones. And most everything that we've been talking about is kind of there. Netflix that we just talking about, it's at a resistance level right now. This could be something really fun. Only problem here is, here's the daily chart, making our way back up slowly over time after that kind of monumental crash we experienced. We're kind of back there. We're back. We filled this massive gap right there. And where was that support level? Way down here at 338. We're at 360 right now. On the top end of that, maybe around here at 398. We might have a little bit higher room to go. But I still think eventually this bad boy is going to have to be coming back down. You see the earnings over here gapped up a little bit more, mostly off of the earnings from the they have this new paid service plan, ad. There's an ad tier on Netflix now. Apparently, I got the most expensive one because I'm dumb. Um, but they have a new ad tier or something like that where you like watch commercials in between your shows and things like that. So they're making more money off of that. Um, on the other hand, there's Tesla over here. If you want to short something, this is probably going to be the thing to short. This is the one thing I'd be like, oh yeah, I could hold this short for a week plus when everything else I'm kind of doing maybe 1 to 3 days. Tesla is something where I could short this thing to oblivion, or excuse me, buy puts can to oblivion here, because again, just look at that. I mean, this is absolutely insane. Now, I get that shorts pile drived on it. I get that CNBC has been talking very unfavorably about Tesla because they don't like what Elon did with Twitter. It kind of sucks. Elon has definitely been very controversial. Whatever you say, he's been just controversial. People either hate him or they love him. They're not just or meh like they used to be. Um, and so you saw the ass Tesla just go down and down and down and down as that pessimism kind of changed. And then what happened? We kind of hit this support level over here. It's kind of like, well, support over here was a resistance level over here. And then we managed to bounce off with positive earnings that we just had a few days ago. And you can just see, boom, really, really nice moves, bouncing off here a little bit more. Um, this is something where, like, wait for the NASDAQ itself to actually hit some of those resistance levels. So if I were to go over here to the YouTube one, because the NASDAQ just broke out, we can go a little bit higher, right? Breaking out here. Perhaps if we kind of have a positive day for maybe 2 more days or so, right? You can see the NASDAQ maybe get back up here to 12,785 with some good earnings reports and stuff like that. Tesla eventually is going to be so overbought, it has to come back down. Now, that's the thing. Um, but I wouldn't even say it's going to come to like just a solid level like this or this. I would most likely just go with your basic fibs and trust the process works there, regardless of what you guys are going to be going for. Um, that's the way I've been doing it, but it kind of depends on which fibs you guys are going to be trusting at this point in time. There's a couple that you guys could be using. I think most people are using this one right now. You can see how that one kind of worked out there, worked out here a little bit more. Let me see if I can go over here very fast. Little pivots down here. That's just a trend line right there. Close to pivot over here. To me, though, usually these longer term ones just happen to fare better. So you could even go from the weekly ones. Here to high, over here to low. I think that's going to be better. Otherwise, you're going to go from here to here that we just showed you. You can see we're testing that out. Or you guys can go a little bit longer. There you go. And aiming for kind of around here, around 12,453. Oh, this isn't testing with this NASDAQ. I could see us getting up here, possibly wicking above it, but ultimately at the end of the week getting rejected by the 50-week moving average. Again, we'll have to wait and see what happens. But if the earnings are good, on Thursday, we could easily break above this, have some really crazy movements, and then that's where we start going up here to 13,000. People are like, oh my God, the bear market really is over. And then later on in the quarter, maybe even going into Q2, we have this big reversal where we start coming down a lot and people get freaked out again. And oh my gosh, yada, yada, yada. We've kind of been through these scenarios before, everybody, where we had these really beautiful pumps and then they just ended ultimate disaster. The media is trained to get you guys to get really excited about these pumps, which you guys should be if you guys are making money. But don't feel like this whole thing is over because the sales data is still going down, production is still going down, guidance for a lot of these companies is still going down, yada, 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 okay? Okay. And hey, Chef, happy to see you back, my man. Can you get Cat? I've been wanting to do a put on it for the longest, but it kept running. Yeah, Cat's been interesting. So I did see it actually had a little bit of a dip a while ago, but here, let's go to the weekly. Yeah, this one right here. This is the last time I even saw the dip. Oh, excuse me, not the daily right here. This little dip right here. Normally, this has been having a pretty nice run. You saw it break out a while ago. I was really trying to break out those trends. I guess I should put it up a little bit more. Yeah, look at that. It even has a couple of false little moves here. That's kind of nasty. I guess you can see the trend changing, I guess. Um, let's go to the weekly. See me monthly. This is a pretty wild pullback, breakout. I have to just say this because, like, I don't exactly know where they're getting all their money for at this point. Because as production goes down, like, who's actually going to be buying large amounts of Caterpillar products? So let me go over here very fast to because when you go to all-time highs and stuff like that, even in this environment, you have to kind of question why this is happening. I need a little more data for that. Give me It was upgraded January 13th from neutral to buy. Let's see. Oh, let me just type in this. Why is cat running? Why is cat running away from me? No, no, no. Cat running. Stock. No. Past month. There we go. This is from the 16th, so just a couple weeks ago. Let's see. It says it's because it got upgraded, but why did it get upgraded? Oh, with the huge demand on orders, the company's been able to increase its prices. So they post their earnings January 30th, which is tomorrow. Yeah. So tomorrow, I wouldn't play around with it until then, but it looks like a moderate buy here. Q4 2020 or estimates. They're hoping for a lot of stuff. Maybe from the infrastructure bill we saw a while ago. Like I own Caterpillar, but I bought it 2021 from the infrastructure bill. And I don't even own it as much as I used to, right? 2021's back over here. It wasn't even, oh, I guess 2021's over. No, yeah, 2021, yeah. I mean, I haven't really made too much of a profit off of it. Then, oh no, the bill got passed over here in September, October. So I haven't even seen a crazy move. I just kind of holding on to it because it's a good company. Surprised actually this is profitable. I did not think it was going to be profitable at this time. You can even see it now, even having a breakout there. Let's check this out. So earnings, of course, tomorrow are going to make this very, very hard for you to even want to trade at this point. Let's go back down here and look at this from a longer term perspective. You see that resistance right there, heading up some resistance right here. So maybe later on this week, oh, that's what the resistance really was. It was just getting back above that Fibonacci level. Yeah. You have an option to probably start doing some puts around here at 268. The last time we came over there here, though, you can see it really didn't have a massive drop. I would say if you kind of open up a put right here, maybe a max of 5%, that'd be a lot if you get in and out, right? Especially depending on the position, but it's not like the good old drops you kind of imagine where, it's going down like it's like 20% within a couple weeks. So you might be looking at a shorter term trade here. I might possibly wait just for us to have a death cross between this 20 and the 50 on the daily moving averages. You can see they're really close right here. And I would assume eventually, even depending on these earnings, even if we go higher, so I would say sometime in the first week of February to the second week of February, you're going to have your opportunity. I would hope that it would come here first. You can actually have that big reversal there. But just because of earnings, well, probably earnings to what did I say? Let me go over here. It said something particular that made me question it. Yeah, not confirmed. Let me go over here very fast. Let me actually find out when these earnings are for you. So we got earnings coming out January 31st before market open. So that, oh, this is the 30th. It's the 31st. Okay. So the 31st. So that's not tomorrow. That's going to be Tuesday then. So if it's Tuesday, I would say tomorrow you might see a little bit of resistance as far as this is concerned, but it might actually have the opportunity to pop up higher, then get rejected throughout the middle of the day. So maybe if you go over here to the 15, you can see this overall trend continue. We had a little bit of a double top here to here, but that broke down really hard after throughout the after hours session. So I would say that possibly tomorrow, as it kind of picks back up, I think you would have an opportunity to get it buy some puts over here. 265s expiring this Friday. Play it for a day, have some fun. But primarily, if you wanted to hold this for a little bit longer and you're hoping that maybe earnings are going to be poor on this, I would say do 260 puts expiring this Friday. Only a small amount because you just never know what the earnings are going to be. You don't want to risk too much there. And then as a hedge, I would do 275. That'd be another level of all-time highs. 275, and whatever amount of money you put on these puts down here, if you're more inclined to go more heavy in the opposite direction, like the put direction to the call, I'd say, let's say you invest $100 on these puts. Let's throw out a number out there. Invest 25 to $50 on these calls. Because I would assume that, if we go back over here to the daily charts, see this earnings right there? Big pop. See this earnings right here? Big drop. Kind of any other earnings? Earnings right here, big drop. Earnings right here, strong move, but not really a pop. I'm looking for another one, maybe over here. Yeah, there's a big drop right there. They have a history of having some pretty volatile earnings days, which means if you have that hedge there, regardless of which way it swings, you should find some way to make some money there. Obviously, you're hoping to make more money when it comes to it coming back down, but that'd probably be the play, especially since it's lining up against a really nice level of Fibonacci resistance. And then on top of that, you also have to deal with earnings report coming out, looks like Tuesday before market opens. So if you want to place this bet, you have to place it tomorrow. You can't place it Tuesday and hope and see it come after hours. You're going to have to place it tomorrow, unfortunately. Or maybe not unfortunately, but you're going to have to place it then. But honestly, I would say if you're going to be looking at this, again, small position because this is still going to all-time highs. Earnings is going to screw up this whole entire thing. Very, very risky position. Should be 260. Well, if it's up here on 268, I do 260. Otherwise, you can go to 255. 255 to 260 strike price expiring this Friday. Or if you want to go the hedge way and go with calls on top of that, 275 to 280 calls expiring this Friday as well. Excuse me. Either way it goes, should have a big pump there. It does have a nice history, especially over the last few quarters, of having some really robust moves. So even if this $100 on the downward position goes to zero, well, this $50 position, right, could still go to $300, and you only invested maybe $150, so you're still walking with a profit. That's the way you want to play it here. Last time we did something like this as members, I think it was Starbucks or something similar to that, and it worked out very beautifully, but it was still kind of a moment because you always hold your breath, because the thing that kills that type of strategy there is if earnings are just so-so and that it does nothing. It just goes sideways. But if that, for whatever reason, if that does occur, that's why you're going to be holding it, or you have the expiration date being Friday. It's a Tuesday play. Sure, you might lose 20 to 30% of your value, maybe even up to 50, 60% with a type of move like this. But you'll be able to still not be at zero, if that makes sense. So I would say your opportunities coming up over the next few days, but just be very, very careful with it. It's going to be more of an intense play, if you ask me. Hey, Chef, what does upgrade mean? Basically, when it comes to agencies out there, they say, hey, we think you should buy something, we think you should sell something, or we think you should hold something. When an agency comes out and says buy, they're saying, hey, we're changing our stance from neutral to buy because we think that the market environment suits them to actually exceed our expectations, and actually we see the price of the asset moving up in the short and medium term. They're basically just saying we think the stock is going to go up. All right. And so when you look at stuff on Finviz like this, you'll see that there's not just one, there's plenty of different upgrades, right? You got BOFA Securities, Cohen, UBS, Deutsche Bank, Bernstein, Wells Fargo, Jefferies, UBS, Bernstein, agencies out there. Most of you guys will probably learn to just trust maybe a handful of them. But you can see back over here on October 28th, it was downgraded by Deutsche Bank from buy to hold. Not to sell, just instead of buying it, just hold it, right? And their price target at the same time went from 196 to 221. We're at 264 right now. They still haven't changed their call on this one. So that means they still expect this eventually to come back down to 221. That's their kind of thought process. And what's around there? That support level down here from this last little move back where the Fibonacci level we just checked out was. So usually if you see a big pop or something like that, you probably hear about it on CNBC, Fox Business, Bloomberg. Macy's popped today as Deutsche Bank upgraded it and explained it right. That's usually what they're for. I tend not to really listen to them, honestly. But yeah, because usually Caterpillar, I mean, it's a solid company. They're making money, right? They're $7 billion last quarter. They're making perfectly good money. I think the thing that's really pushing this thing higher is a little bit of the infrastructure bill we saw last year, as far as Joe Biden and the Democrats, fixing up the broken bridges and stuff like that. A lot of that equipment is going to have to be bought at exorbitant prices, of course. Remember, lots of government funding, companies will raise the prices, and they'll make a lot more money off of it. It's just kind of the way the world works. But they also have a dividend. Now, it is a really trashy dividend, if you ask me, but it is a dividend nonetheless. I think it's like 1.5%, 2%. It's 1.81%. And what a lot of people have been doing over the past few months now, quarters, we've been talking about this as well, is going for dividend plays out there in the market. Because what we always look at here is you go to screener over here, there's 8,000 stocks, 8,000, a lot of them, a little over 8,000. You go over here to dividend yield. If you want it to be positive, just above zero, if you want something that has a dividend, and that's from America, that 8,000 goes down to about 4,000. Now from here, let's say you want it to actually be a decent company that actually has a stronger market cap. So let's just say over a $10 billion market cap, respectable amounts, right? Then you only get 447, cut it down in half again. And then from here, you have to go by sector. So what sectors aren't going to be like, I don't want to be in this anywhere near sales because I think the economy may go down. And I'm afraid that Macy's may go out of business, Nordstrom's may have issues, that type of stuff, right? So I don't want to go with anything like that. Then you're just going to peek through here, look at the chart, see what's going on. And as far as these dividend plays, right, you can see what's working out, what's not. So actually positive over 1%, probably go, yeah. If you want over 1%, you got to go to 356. Here you go. So ABBV, we talked about this one a while ago, ABC. ABBV is going to be interesting right here. Just broke down a while ago. Simple breakdown back in, looks like about a month ago now. ABC is looking like it wants to break out, but also at a resistance level here. So, but mostly everything is not terrible compared to where everything else was. Like, last year, this is still above October. Still up. Nice and up. Everything's still doing fine. Still doing fine. You may find something on the downward slope here, but dividends have been usually pretty good here, honestly. Something that's been going down. Let's go over here to performance one. Year down. No. Year to date down. There you go. So year to date down a little bit here. ADP, automatic data processing. This is more, business solutions. They're at a major support level here. Watch out for ADP. Staffing and employment. I don't know who, a lot of unemployment needs right now. AEP, right? So a lot of different plays out. You can see a lot of stuff is facing resistance levels here. Sometimes it's just nice to go to FinViz and just say, hey, let me just look at a bunch of charts. Let me just see what's going on. And you can go, hey, I just want to look at companies that are, let's just do over $200 billion and more. Actually, let's just go to NE for dividend. Year to date, let's just go to NE. All right, basic. All we're looking at is mega cap in the United States. Just look through some of these plays. Apple's breaking out, ABV's going down, Amazon broke out, Avgo at resistance levels, Bank of America breaking out, Berkshire Hathaway breaking down, Berkshire Hathaway B also breaking down, Costco still in a consolidation phase, heading towards resistance, CVX, bunch of trash, but I guess at a level of support there from this level right there. Disney broke out a while ago. Look at that beautiful breakout right there. At a level of resistance right now, if you consider that point right there to that point. It's, you get a basic understanding. Google at a level of resistance here. The other Google is at a level of resistance. These are just mega cap stocks, so it doesn't matter as much. You got Home Depot over here, something I'm holding for the long term. At a level of support, basically kind of at this lower trend line, but definitely not the higher end of the range at all. Over here again, a little bit of support from Johnson & Johnson. All these companies, as far as the vaccine, are kind of in an position right now because they're trying to raise prices like freaking mad on everybody. I don't even think I'm going to get vaccinated again. I think I just got vaccinated for COVID because it was kind of like the requirement thing to do. But I don't feel like I need to get vaccinated ever again. Plus, vaccination sucked more than COVID. I got more sick from the vaccination than actually COVID. And I got COVID like 4 times now. It sucked every time. Only thing I'll say is COVID, I lost part of my taste. That's the saddest part of all. Lilly, not much there. What is some of these freaking long wicks though are kind of weird. Meta building its way back up, but again, hitting an old resistance level from here, hitting that right now. So you can kind of see that tech, it looks like you're getting this trend that, hey, tech is kind of hitting this resistance level now. Well, what could actually break tech out a little bit right now? Let's talk about it. Even NVIDIA had a breakout a while ago. Look, it's still right there at a resistance level. Oracle had a resistance level. If we're at resistance level, that most likely means we're going to be heading down pretty soon, right? But what could actually lead us up? That goes back into the earnings that we just talked about as far as Apple, Google, Amazon. If those have great earnings, we're plowing through those resistance levels, and the whole market does something really absolutely ludicrous that shouldn't happen. It'll make the next crash that much more worse, but it'll still be a great opportunity to make money during that period of time. And hey, Chef, am I still buying Meta? No. I bought Meta a while ago when it was crashing hard, just like I did with Amazon and everything. I did it with Intel the other day. I told you guys I was going to buy it, even though the company is not really being managed properly. Or was it IBM? No, because I own both of them. Let me double check. But yeah, over here very fast. INTC weekly. No, it wasn't this one. No, was it? Yeah, I did have a gap down. Yeah, yeah, I bought this one. It didn't. I mean, it's up, but it's only up because the index is up, not because the company is actually doing something spectacularly well. But I don't. I think it was. I could have swore it was IBM though. And there's the gap down. I think this is more. This is the one I'm thinking about here because I bought both after they both didn't have fantastic earnings. Again, mostly as of computers and computers being computer computers not being sold as much as they once were. Um, But yeah, coming down a little bit more, you can see that clear little move that heals us a little bit of a breakdown, maybe even a double top if you really want to call it that. At this point, though, it's just going to go back into this ugly trading range. This is the trading range it's been in. The one reason I'm okay with buying IBM here, even though I think it might go down in the future, most likely will go down in the future here, it didn't have a parabolic run like everything else did. This is 2020. See how we didn't have a run? We had a small run in 2021. Small. You compare this to Apple. This is the lows of 2021. You see that big rally? We didn't have that. So, I'm a little more okay with holding it. But even when it comes to Apple, again, we're facing those levels of resistance now. Apple actually has a little bit more room it can run up to, really just into this 50-week moving average. But then it runs up into a resistance level. What happens then? And that's why earnings are going to be so important this week, and why you guys should be paying attention to this week like crazy. We'll be talking about it literally every night leading up into it. But as far as interest rate hikes, I'll be doing a stream during those rate hikes. I'll also be doing a stream on earnings for Apple, Google, Microsoft. That'll be around 1 o'clock. That may mess up a little bit of my new strategy or my new schedule for streams and updated videos, but I think it'll be important just to kind of talk to you guys through what's going on, and we'll have CNBC on, and we'll be kind of just watching to see what they're talking about there. But yeah, I haven't really been buying Meta as much just because it's rallied up so much. I'm almost like I kind of want to scale out of Meta now. Do I have Meta on here? Where's Meta? I have it, just not sure where. Where's Meta? Oh, it's still under Facebook. I don't know why. Yeah. See, again, it's at a level of resistance. I'm really inclined to sell my Meta this week and buy it back down if it comes back lower. Even if this somehow turns into maybe the market bottom was here and we just come back down here to have some type of double bottom down the road. Like this is hypothetical. At least at this point, the Meta that I was able to buy down here and down here, it really this is the weekly chart, so it looks more like this. I bought it like over here, right? Bought some here as it moved up a little bit more. Really just kind of around this little first 3 days is where I got really crazy with it. It's done wonderfully. Like I did miss out, I guess, in the bottom. But you see right here, that's like a rally of like 56%. My Netflix is a little bit higher, but still great. Like, it's perfect. Let me go back over here to the monthly chart. Back over here. All right. A little bit of support over here. Really not the best level of support, I would say, honestly. But I was only buying it off the earnings and hoping that maybe it might come down all the way to 79, 78, kind of this range. It didn't. It popped up well before that. But as far as I see it, this resistance level, I'm still more inclined to just start selling off assets I bought a few months ago and use that money to buy more stuff as it comes back down. Now, for my long-term portfolios, I'm just going to continue to hold it and hope for the best. But for these swing trades I've been doing, like not even swing, like longer-term monthly trades, I just don't feel like I really have to hold them anymore. 50% in just a few months, I mean, it kind of works out really well for me because especially because, like, again, my thought process here was it's going to be like, maybe 50, 100%, something like that. But it was going to take more than just a few months. It was going to take like 8, 10 months for me to get this money back. And it's happening so fast that I just feel like, hey, I want to be out of it. And then you guys know how I feel about at the same time when it comes to ZOM and stuff, right? I told you guys I was scaling out of ZOM over here. I really scaled out a lot right here as it was kind of falling back down, and I had bought a lot of it down here back in the 2020 time, and I continued to buy up some, but it was a dividend play that I just wanted to hold. And I was look at this rally. It was absolutely phenomenal. There's different ways you can look at this. This is probably the worst way to look at it, but you can see that resistance level up here. It went up a little bit higher. Currently, I think the resistance level up here is 125. You guys might want to make some puts up there. But you could see how it didn't work out all the time. So it kind of came up, worked out for maybe one day, still had some decent moves. I think the other one, though, was this one. Let's see. Well, there's a smaller one right here, actually. That one was interesting for that. I scaled out here too early on one trade, but that was a while ago. Let's go from here to here. There we go. That's the more middle one right here. And that's where we kind of stopped right there. And, we had some smaller hiccups there, like hiccup here, hiccup there, but, still making some nice moves. I'm just have a habit of just taking my money, like just being done with a lot of stuff, and I feel the same way about Meta right now. Now, will I leave some in there? Sure, but will I scale it like 80%? Yeah. And I scaled out 80% of my Exxon Mobil here, like back over here, or I guess throughout this little peak price here. And now I only have like 20% left. But that 20% relative to where I sold it at, it's still up like another 30%. So I left some money on the table, but I still walked away with all the money from down here over here when the whole market was freaking out, and I'm still being very happy with it. But stuff like PXD, when it has a higher dividend of like over 10%, and I bought at the same time, I'm still happy to continue holding on to this, even if it does break down, because this is a long-term dividend play. But dividends, of course, you're holding for a longer period of time besides just looking at like stuff like Meta and stuff like that. If you want something to short, honestly, keep an eye out on the banks. Banks usually trade themselves quite a bit. I'm waiting for them to hit some type of decent level of resistance, then I'll be fine. But you see October, they just kind of exploded on the spot. Visa's still been doing fine, right? Going up almost to all-time highs here. The system is kind of getting more rational again, and usually that's when everything kind of goes to hell. But even Chevron here, again, looking at some resistance. Maybe it comes back down. Maybe it breaks out again. Who knows? But when it comes up to that resistance, you can bet I'll be watching. ConocoPhillips had that breakdown, but again, a short-term breakdown. Came back down to some support levels right over here. Yuck, I didn't really like it too much, but Oxy, still in that trading range. DVN broke down, but now it's just going more sideways here. Back into another trading range, I guess you would say. But I found a nice low Fibonacci level. Not much else besides that. Although I would say for some of these moves, though, if you guys are trading the breakdowns, just play with some of these larger Fibonacci levels. They tend to do a little bit better when it comes to commodities and such. All right, see a little tap right there. Not so much here and here, but for that big pullback, that's what I'm usually looking for. Because then it gives you an opportunity to buy up for the next big rally here. Otherwise, you guys are going to be looking at something like, can I do this here? Hasn't come back down to that level just yet, but maybe in the future. Let's see. What's the other halfway point I could see from here? Guess it has to be this one. A little bit of a pivot there. Would have been kind of horrible to play with it, though. The pivot worked out here pretty well, and now we're heading up that level of resistance. At least at this point, though, we're at where most of these assets that really determine where crypto is going, and this like the tech and the overall fiber of the economy, like the S&P and the NASDAQ, we're at some major levels of resistance, everybody. The cool thing is, if you guys want to see the market go higher, is, of course, Apple earnings, Amazon earnings, and Google earnings. If those are good, we have a really good week. If they're not good, we have a really bad week. And especially if you add that and combine that with the fact that on Tuesday we have interest rate hikes coming out as well. And hey, Bideford, have a good night. I think about selling Meta 2, bought it as it crashed you. Personally, yeah, selling. I'm much like 90% sell, 10% reason to buy. 10% reason to buy is more about the earnings plays we've been talking about over the past few days. I primarily think this is probably the last good week we have, but that's only again because I don't think Apple is going to be. I think Apple's earnings may be just okay, but I don't see Google's earnings being fantastic, and I may be wrong about that. Okay, I'm just looking at advertising dollars primarily when it comes to Google. I don't think Google's earnings are going to be fantastic, and I don't think Amazon's. It's not even earnings. I don't think their guidance. Amazon and Google. I don't think their guidance is going to be good. I could see Apple's guidance just being so-so. It's all about the guidance. What do they see happening in the future? That's what I have issues with right now. And of course, You see Bitcoin up here around $23,000, $24,000, almost $25,000. Also flirting with this 50 week and 20 week, 200 weekly moving average. Excuse me. That concerns me a little bit, right? Especially after this big pump. Tell me a time when Bitcoin has pumped up a lot in a bear market environment where we've actually had a really good, a really good continuation there. It's rare, right? We've had good pumps here, but this is a good old bull market, right? We've had pumps here continue to go down. We've had pumps here continue to go down. Pumps up here, right? I mean, this pump has actually been pretty nice, though, mostly because of the FTX scandal and how far everything came down. But this pump from low to high, at least from where we are now, that's 52% up pump. You put this into more historical terms, I guess maybe more of a bearish market environment. This one right here from lows to highs, even though it looks like it all happened within 1 week, that was a 42%. Over here, this low to high ran up 63% before crashing down. That was a COVID drop, though. Over here, we ran up 97%. Over here, we ran up 57%. Over here, we ran up 49%. Even some of these smaller ones that we had, that ran up within 21 days, ran up 26%. We're used to seeing some nice moves like this. I know this doesn't go back in time all the way, but I'm still so hesitant about what we're looking at right now because I just think eventually we're going to have a big drop back off. I don't think we're going to be coming back down here anytime soon, but I can see us coming back down to here, which is like 21,000, and probably around here to 18 to retest this level. Make sure it's really a strong support level, then probably try to bounce off of it later on. But I don't think we're going to be crashing like this. At least I hope not. I hope we kind of go sideways, test this out, maybe then rebound like that. Something like that. Because this breakout has been decent to us so far. The goal over the next few months, guys, is really just to break out of the 50 and then possibly try to break out above the 200. That's going to be the key. It's going to be very, very hard, though. We really have to hope that earnings reports are just really, really good over the next few months, guys. Next few quarters. That's really what we're hoping for. But okay, everybody, I'm going to call it a night right now. It's a nice little fun hour and a half shooting with you guys. Keep an eye on all these assets, though. Really, I'm more inclined to buy puts, but unless it's really like as they hit those resistance levels, that's what I'm looking at. Does 4-hour test look like a cup and handle? I could say you could probably try to make the argument it's a cup, forming the cup like that, but it hasn't made the handle just yet. So perhaps if tomorrow, because it is at that resistance level right now, if tomorrow or Tuesday you start to see it making that little dip, you could try to buy it up right there and hope for a solid move. That'd be a reasonable type of trade to make, especially since you're seeing at least on the 4-hour trade, those golden crosses start to peak back up here. When's the last time we saw that? Oh my gosh, it must be forever ago. Yeah, back over here, you saw that nice little pump. That was your typical breakout like this, though, right? We had a false breakout, too. Oosh. Yeah, that's a little bit interesting one. But yeah, I can see that as a nice play right here. Oh, is it going into the split? That's why. But if you go over here as far as Tesla's concerned, if that does occur, just watch out for a heavy level of resistance as we start facing right here. Around the $200 level, I don't think we're breaking above 200 if Tesla decides to keep on running. And I think Tesla will most likely try to continue to run until tomorrow or Tuesday. And then from there, it may even go sideways, but I think it's probably going to be going back down here again, maybe just back down to 166 or so. But then it really comes down to what happens when earnings come out. Are we going to break down again? And in which case we come all the way back down here to 140 for Tesla, which will be a great opportunity to do some shorts and puts. But definitely going to be, a lot of people that bought at Tesla at 177 Friday, they're going to be really ticked off because of it, right? And hey, Aaron, you said everybody watching tonight's stream will get a coupon for the discounted free course. Oh no! So the way it'll work is basically like how I did with the trading journal at first. So basically, if you guys watch the stream normally and you guys engage in the content, I'll just give you a free coupon for it. And all I'll ask is that you guys just give it a good review, basically. But members, regardless if you guys are at the streams or you guys even talk to me or communicate or use the comment section, you guys get it just because you guys are awesome for supporting the streams. Right. So yeah, members, you guys will just get it. And ow. Sorry, Loki's standing on my foot here. He's trying to get pets. But yeah, you don't have to worry about that, especially because you guys are in the Discord as well. Yeah, you just hit me up and say, "Hey, I'm a member." At the time I launch it, after I launch it, I'll eventually it'll go away. But yeah, it'll be nice and easy for you guys to be able to get to it. But not everybody can pay to become a member, but I still want some of those people that have been here for a while to get the course. So if you guys aren't a member yet, don't worry about it. As long as I see you guys engaging, just say, "Hey, Michael, I heard you gave out coupons for the course." Like, yeah, go for it. I like that they allow me to get coupons out though, because I like this course is going to be like $200, $199 when I actually sell it. And I didn't want you guys to pay $199 for it. And that's why I'm also doing some of these smaller tutorials built in for the YouTube channel here down the road. But what makes this one so much different, I would say, is because it's structured differently. So, to like introduction, part A, part B, part C. Whereas in YouTube, it's all just kind of one video. This is made up of like 100 different small videos, each going over different topics. And then you have larger videos that kind of combine all those topics to help you guys actually learn and practice some of these strategies that we talk about as far as breakouts, breakdowns, Fibonacci's, GAN boxes, stuff like that, right? So like there'll be a whole 20-minute segment on GAN boxes, so to speak, right? So if I go over here, I know this is like 4 GAN boxes, so let me find one that's just like 1 GAN box. Yeah, here's one. Um, we'll have a whole thing of just like how to add a GAN box, why you need GAN boxes, what each part represents in the GAN box, like this part, the diagonal lines, the support levels, the ups and downs, plus what's going on with the GAN squares on top of the GAN boxes, how to make everything look exactly right, how to do the theta, how to separate everything out you want to do, a whole bunch of stuff basically. Um, so it's a different type of format here. Even the tutorials I do on this channel, like I have a video like this that does fairly well. I think it's ranked #1 for GAN boxes. So if I go over here to YouTube and I type in, I've been obsessed with music of the night lately. GAN box trading strategy. I'm pretty sure my video ranks #1, even though nobody's really like searching for it right now. I've still made such a good video that it pops up at #1, and this is a 7-minute video. Imagine me making a 30-minute video. I don't have time normally to make a 30-minute video, but for this course, oh heck yeah, I do, right? Because I've been working on this course forever, and now that I have taking my ADHD medication, I'm hopefully have enough time management skills to get it done. So hopefully that works out. But I even have other like my GAN fan trading strategy right here. Maybe some other ones I have down here. This is just for you because it's just for my channel, right? But yeah, so I'll break down everything in kind of more detail, but that'll be more of a course situation because remember, the reason I make YouTube videos so much shorter than a lot of other stuff here is because the way YouTube determines if the video is going to go viral or if it's going to be put on top of the search rankings and stuff like that is based off of how long people watch the video. It's called average view duration. So if I make a very good video and it's everything that everybody wants, it's really really good, but it's too long basically, which in YouTube's eyes is no longer good because I'm giving too much information. The person probably when they search for the information, they probably just wanted to see how to set it up, and they can kind of get an idea of like, hey, this is a support level, this is a support level, up here is a resistance level, this is a support level. They kind of got the gist of it. But if they wanted to know everything they needed to know, then they might watch the whole thing. But it's rare that somebody would actually want to know everything there is to know about a GAN box, right? It's rare. And that's why when I did this, you see this guy's video right here, 22,000 views 2 years ago. I just put this out 2 months ago. It's already up to 4,000 views. And this guy probably has way more subscribers than me, most likely. Oh, only 9,000 subscribers. Actually, hold on. Oh, there we go. He's also using TradingView, though. But basically, I make my videos shorter and sweeter and to the point because I know what the audience. I'm a marketing guy. I have I went to college for marketing. I know what the people want, so I give them what they want. But I also understand that like videos like this will be better for an overall course. This is 11-minute video, a 24-minute video, right? This isn't probably going to help you out as much because sometimes it's just too complicated for a new investor, which is why I'm doing the whole tutorial, like spoon feed you all the information. Step by step spoon feeding is like the whole point of this course, which is why I'm charging $200 for it. But that's also why I'm giving it to you guys for free because you guys have been here for forever. But okay, hope you guys all have a good rest of your night. If you guys ever have any questions on that course, let me know. But I'm going to start doing more work on it tomorrow, and by more work I just mean starting the recording process for it because I have to have everything so organized in a whole bunch of different files. I have to have all these pictures and diagrams to use. I have to build all that from scratch. It's going to take forever, but it'll be done before the next bull market. So when everything's pumping up, you guys will be good to go. It'll probably be done over the next few months actually. because that's all I'm going to be working on. That plus YouTube stuff, my marketing stuff, I kind of have it on autopilot right now, and it's mostly just doing calls and introducing people, and I get paid for that. I'm a networker pretty much at this point, which is fine. It's good. And then I'll be taking some vacations. You guys know I'm going to Vegas in March for like a week. I thought I was only going to go for 2 days, but now it's like up to like 5 days, 4 nights, something like that. I will be taking more vacations. I know I'm going to Nicaragua later on this year for fun. That's what I'm basically going to be doing outside of it. But by the time I go to Nicaragua, this course should already be done. And then, of course, after the course is done, I'll have smaller versions of the course on YouTube that'll be funnels to kind of drive other people from don't watch my channel to go purchase the course as well. So it'll be fun. It'll be very fun. But okay, buddy, have a good Sunday. If you guys watch these 2 football games tonight, they were absolutely wild. Absolutely wild. So I hope you guys had some fun watching those. Hopefully the Super Bowl in a couple weeks, I may have a watch party where I'm just like chilling out and watching it on my computer. You guys can't watch it on my computer because YouTube will close it down. But we can just chat and kind of watch what's going on in the game. But okay, buddy, last time, promise. Have a good night. Loki says good night as well. Yeah.